Visa partners with FTX to roll out crypto debit cards in 40 countries. Payments giant Visa is launching crypto debit cards in more than 40 countries in partnership with cryptocurrency exchange FTX. Visa and FTX launching crypto debit cards in over 40 countries. Debit cards allow users to pay for goods and services with the crypto balance in their FTX wallets at 80 million merchant locations worldwide that accept Visa. FTX Visa debit card holders will not be subject to any administrative or processing fees for using the card. The crypto
to roll out crypto debit cards across 40 countries. So as a result of the news, FTX's token, FTT, surged 7%. The partnership is going to focus on Latin America, Europe, and Asia, according to a CNBC report, with CEO Sam Bankman-Fried telling the media outlet that crypto debit cards can disrupt traditional payment networks. I think it's interesting that they're focusing on every area outside of North America. But Adam, I'm going to pass this off to you first to get your thoughts.
So first off, the word kind of partnership always jumps out at you. Seems like there's probably more credibility here than there is with a lot of the partnerships that you see in the world of crypto. But it's just worth noting that sometimes what one company says is a partnership is not actually so much a partnership, so much as a standard commercial relationship. So it's worth kind of pointing that out. You know, I really question the ability of these types of things to have a disruptive effect, really. I think that for people who have a lot of crypto and who would rather not sell it until the kind of minute that they are going to actually spend it, it presents a useful solution for them. Will it actually disrupt the kind of way that things work? Well, I think it's hard to disrupt the existing kind of credit card system when you're using the existing kind of credit card system as the means to make this disruptive type of thing happen. I just don't really get it. Like, I see why, again, like in a lot of places, you know, when you're talking about outside the US, for example, what it means in practice is that you can store your funds in the form of cryptocurrency rather than, for example, a currency that goes up, 80%, or loses 80% of its value over the course of, a year, as has happened in Turkey. So I definitely see, like large opportunities for it in certain markets that have really messed up monetary fundamentals right now. But I think that as far as kind of like the rest of the world is concerned, again, it's something that might be useful to people who have a lot of crypto and want to spend it, and it kind of presents much more than that, unless I'm missing something fundamental. Danny, I'll toss down to you. What do you think here?
Yeah, I mean, when these credit cards and debit cards and pieces of plastic can actually be used to deliver crypto from the spender to the merchant as crypto, I think that will be really cool, even if especially if it's happening through a MasterCard or a Visa, because then we're seeing that these big payment companies are doing the work to have support on-chain settlement, however that may be. I'm pretty sure that this is not that, though. This is going to almost certainly be a situation where, I go to a store, I swipe my debit card, let's say I have Solana in the background. The Solana goes, it converts into dollars. The dollars settle with the merchant as dollars. So the merchant doesn't need to know or care what I'm paying with because the merchant gets dollars. Now, from a adoption standpoint, that's a lot more feasible than saying I have a crypto credit card that will pay you in crypto and therefore will only be accepted by people who want to be paid in crypto. But from a moving the ball forward perspective, all it is all this debit card is going to be is like an instant cash out mechanism in your wallet, which is, I guess, handy if you really want to just spend your crypto out and about, but it's not that cool, and it's not really moving the ball forward or disrupting anything, at least not in my book.
Yeah, I'm with you on that. I'm kind of bearish on, crypto debit cards. We've seen them out for a while. The adoption isn't especially notable. I think the stuff that is notable is the stuff that is, nice value adds, right? Say this is denominated in USDC or something, and there's some additional yield that you'd be able to get that is not going to be available to you through a traditional savings account, though that may be changing given the current macroeconomic condition. But it is, I think, unless there's some nice value additive thing, the idea of having a card for you to spend your crypto, be it through FTX, be it through the Coinbase card, be it through any number of the competing alternatives out there in the market, hasn't really seen, to my knowledge, a ton of user uptick. There's still, especially in the US, a lot of issues around how you tax these purchases, right? those implications are significant. And I think that's why we're seeing that this isn't being rolled out in North America, right? This is being rolled out elsewhere. So from the US perspective, especially, this has been a thing that's sort of been out there, but hasn't been especially embraced by the greater community, even among the crypto diehards. Jen, I saw your hand. Adam, I also saw yours. I'm going to toss it to Jen, and then hopefully she'll toss it to you.
Yeah, I was a little excited about this story, guys. And because they said they're going to focus on the Latin American market. And it made me think about the Lemon Cash card, which Argentinians are using. I don't have the exact number, but every time I read about this Lemon Cash card, more and more Argentinians are using this because inflation is through the roof in Argentina. I think the last time I read, it was over 50%, and people are able to hold on to a bit of their wealth in crypto and then go out and spend that crypto for everyday goods. And so I can see how this would be a benefit rather than a novel idea in countries like that. And so I'm excited that they're focusing on Latin America with this card, and hopefully they can offer another solution and an alternative to Lemon Cash for the people down there in Latin America. Adam?
Yeah. So one other final note, I suppose, for myself is that, when you're looking at these types of vehicles, the question really does become about what is the currency that it's going to be denominated in. And, we typically think of cryptocurrencies as cryptocurrencies, and we don't become and are already becoming increasingly important parts of sort of how the world moves money and also how the world saves money. The inflation that we're talking about that's happening mostly outside of the US, although we do certainly have inflation here, but comparably speaking, the US dollar is like the least worst option. And so what we're seeing is that as sort of turmoil, from central banks doing all kinds of stuff, which we'll talk a little bit more about in the next segment, as that sort of makes its way through economies around the world, we're seeing a lot of people taking money that they would be holding in their local currency and moving it into US dollars, which means that even as we're seeing inflation domestically, that is significant, at record high levels, we are still seeing the value of the US dollar from an international perspective reach heights that it hasn't in many, many years. And we're also seeing many other currencies that have historically traded at values greater than the US dollar approach parity or even dip below them for, in some cases, the first time in history. So again, all of that suggests that the volatility that people always talk about in cryptocurrency, like cryptocurrency represents an escape valve for people who are looking to have something other than their domestic currency. And if these types of payment mechanisms, especially if they can be stored in US dollar denominated tokens like USDC or Tether, those seem like that is really providing a meaningful function. Now, the question I think becomes, well, at a certain point, once you get to a certain level of instability, do these systems even work anymore, right? Like, does the credit card infrastructure in the country still function on a reliable basis? Because if that's not true, then, well, you kind of might as well use a distributed wallet application, right, to do essentially the same thing. But these are all least worst options, unfortunately. And just in general, it's a real rough time to be doing any of this stuff. So I think that anything that can help towards those does represent a net positive. And then my final comment is that this also represents the one more step down the road to boring that I like to talk about on this show, and every help towards those does represent a net positive. And then my final comment is that this also represents the one more step down the road to boring that I like to talk about on this show and every other show, which is where cryptocurrency is just not exciting anymore in the way that it was 5 years ago when it was new and it was scary. And now we're talking about, Visa and MasterCard, in countries around the world, and, like countries adopting stuff and like all kinds of crazy stuff like that, that again, if you asked a traditional economist 5 years ago, they would have said, no, none of that will ever happen. And yet it has, and it is. Anybody have final comments on this one before we move on?
Road to boring. Love it. After that, what will all the crypto people do? That's the big question. Eternal
will
life
we still
science.
have a job?
Crazy, weird frontiers of biohacking.
All access when I walk in the club, but only if I've been a guest listed. All access when I walk in the club, but only if I've been a guest listed. Walk in the club, walk in the club, walk in the club, walk in the club. I walk in the club. All access when I walk in the club.
RBI says it will soon commence limited pilot launches of the country's digital currency, digital rupee, for specific use cases. The central bank explained that multiple technological options shall be tested and based on the outcomes, the final architecture shall be decided. The concept note also details the planned features of a digital rupee and the RBI's approach toward introducing a digital currency. It discusses key considerations such as technology and design choices, issuance mechanisms, privacy issues, and the implications of introduction of CBDC
product, not just for RBI but globally. So the first is the security of the currency, the security of the digital currency and its integrity. That is very important. The possibility of cloning, all that should be avoided. What impact it will produce on the financial sector, what impact it will have on the monetary policy, what impact it will have on currency in circulation. We are examining all those aspects. We are working on our teams are also working on the technology. We have a choice of between it could digital, distributed ledger technology, DLT, or centralized ledger. There are also central banks which are starting the exercise at the wholesale level and then going into retail. Exactly. We are examining that aspect also, whether we should adopt wholesale and sequentially go to retail later on, or we should also start in a localized area, the retail plus the wholesale. Various options are under examination, and whether the currency should be issued directly by the central bank or we should issue it through the banking system. That is also under examination, but teams are working. I think by the end of the year we would be in a position perhaps to start our first trials.
Well, we wish you the very best because that's a growing debate around the world in terms of rolling out CBDCs at a time when there is so much happening by way of increasing adoption for cryptos. Governor, how are you thinking about regulation for cryptos? We were just touched base actually with Bank Indonesia governor a few days ago, talking about the regulatory environment. And Indonesia, of course, is thinking about a crypto trading tax. So what shape and form could regulation look like for cryptos in India, where also adoption is growing?
You see, you are referring to private crypto. Now, on private crypto, we have in Reserve Bank, we have major concerns around the private crypto from the point of view of financial stability. There are huge amount of risks. There are impact on the aspect of financial stability, and we have shared our concern with the government. So the government will take the necessary policy decision in that regard. So far as the technology of crypto is concerned, so far blockchain or DLT, distributed ledger technology is concerned, that's a different thing altogether. The technology of blockchain, the DLT, can grow and will grow irrespective of private crypto. This technology does not need a private crypto currency to. The technology doesn't need a private cryptocurrency to grow. The technology can grow on its own. In fact, it is already being used by the various corporates in India, and we are also working on that. So therefore, on private cryptocurrencies, we have major concerns, and because it has impact on financial stability, and I am not the only central bank governor talking about it. I think many other central bank governors have also talked about it. The Bank of England, even
Well, let's break some of this action down now with our guest, Dana Peterson, the Conference Board Chief Economist, joining us now to look at some of these jobs numbers. So, Dana, what really stands out to you as you look at the headline number, but also some of the underlying trends you're seeing?
Sure. Certainly there are mixed signals here. We did see 263K in terms of additions, and yes, it is the smallest that we've seen in quite some time. But yet again, it's still a very large number in normal times. But we would expect that the number of job gains per month would slow anyway, even if we weren't expecting a recession because we're at full employment. But certainly with a recession probably upon us, businesses are probably starting to pull back on how many people they're hiring. We saw that the JOLTS data, there were 1 million fewer job openings, but again, still lots of job openings. So very mixed picture here in terms of, yes, slowing in the labor market, but it's still quite robust despite the fact that we're looking at an economic slowdown.
Dana, the number that jumped out to me was that year-over-year wage growth number, up 5%. What do you think this means just in terms of Fed policy, the likelihood that the Fed is going to stay aggressive? And also, is that number, that 5% jump, just still way too high in order to potentially bring down core CPI?
Sure. Our thoughts are that the Fed is going to continue to raise interest rates because inflation is just too high, consumer prices and also wages. And so certainly the Fed hasn't really seen much evidence of inflation coming down, certainly not in these wage data today, and certainly not in the core CPI or the core PCE. So they're still on track to raise interest rates. They're saying they're going to get closer to 5% in terms of the Fed funds rate, and we think that they're pretty serious about that.
Dana, I'm always watching labor force participation, and it was a slight downtick, but how significant is any downtick in labor force participation, given that we're seeing right now on our screen pandemic?
Sure, it's a pretty volatile number, and what we like to do is break it out into two pieces. One piece in terms of your prime age workers, people 25 to 54, and then the folks who are 55 and over. The prime group, we're seeing labor force participation rise and get closer to the pre-pandemic level. It's been happening in fits and starts, but it is happening. Nonetheless, the number of people who are 55 and older, that participation rate continues to remain low. Many of those people left the labor market early, retired early, and they're probably not coming back. And so that's all telling us that we're still going to have this tight labor market with labor shortages still plaguing businesses here.
And Dana, you're predicting a job-full recession. When we talk about the economic impact of that, what does that mean? And what does the next phase of the labor market then look like with this in mind?
Sure. What we're saying is that you're probably going to see negative GDP growth, in particular domestic demand being negative, but not a material increase in the unemployment rate or massive job losses. So we're thinking that the unemployment rate might rise to 4.5% and top out there, which would be a very different story relative to what we saw during the pandemic and certainly during the Great Recession. And that's because you have fewer workers entering the labor market relative to the number of people who are retiring. So, for example, 20 years ago, you had 4.3 working age persons per retired person. That number has shrunken down to 3. Currently, and in 20 years, it's going to be just 2. So labor shortages are going to be with us for a while, even if we see a little bit of cooling amid this economic downturn.
Dana, just what is your assessment of the economy right now? Because the labor market, it's cooling a bit, although like you're saying, that the headline numbers that we're seeing, the unemployment rate remaining very, very strong. We've been waiting to see this part of it weaken. It sounds like you don't think it's going to weaken that extensively. But I guess when we try to figure out how deep of a recession we could potentially see over the next 12 to 18 months, what do you think is the most likely scenario?
Sure. Our most likely scenario is that you have a brief and shallow recession, meaning we have negative readings on domestic demand in the fourth quarter of this year and the first quarter of next year. Now that the Fed has upped its game in terms of how much it's going to raise interest rates, and it's also going to keep interest rates elevated for some time, that signals that the recession could be a little bit deeper, a little bit longer, maybe 3 quarters instead of just 2.
But it seems, though, the rationale of the Fed is we can't drive down inflation without relatively massive job losses, at least north of 1 million. Is that your base case? And if not, how do we drive it down?
Even 1 million job losses wouldn't really move the unemployment rate up that much. It's still consistent with the 4.5% that we're calling for. And so the Fed the Fed also is looking at the same data we're looking at. They're also seeing the labor shortages and the demographic forces that are going to make it less likely for businesses to slash labor, and certainly in those in-person services and also manufacturing and construction where you have to physically be on the job. Many of those industries didn't even fully recoup all the people that were laid off during the pandemic. They still need workers, and they're still trying to get those workers. And certainly if you're a firm, if you think that this is not going to be a very long recession or a very bad one, you're probably going to hoard workers and hold on to them.
So for some of these companies who've not been able to replenish their labor force, what are the solutions? Is it about getting a more flexible workforce in terms of perhaps changing requirements when it comes to things like degrees or hiring people who've been incarcerated before? Is there a lot of wiggle room to get those who either haven't been in the workforce before or are on the sidelines right now?
All the things you mentioned are certainly solutions that businesses have been using, but there are some really key factors here. Again, you have many, many people retiring. The baby boomers are going to retire anyway. The pandemic just really accelerated that trend. You still have roughly 100,000 missing childcare workers. So that makes it very difficult for folks with children to return to the labor market. So certainly that's a solution that businesses can help provide. But also there are policy issues. Honestly, there are fewer legal immigrants than you might expect. And certainly that we reached a peak back in 2016, and policy is tightened since, and it really hasn't changed. So you have a number of factors that are really leaning against businesses finding workers, but they're trying everything. They're raising wages, lowering some of the qualifications, really trying to get marginalized workers, using remote work as a way to attract workers from lower cost jurisdictions and from abroad, and also persons with disabilities. But it's still going to be very difficult for businesses going forward.
All right, Dana Peterson, always great to have you. Thanks so much for joining us. Have a great weekend.
Thank you, you too.